Hello everyone. Today we're gonna do one more look at my experiment investing again. But before I do that, I want to give a warning. Please do not do this at home because this is experiment and you can lose a lot of money and you can like you can gain a lot of money and you can also lose a lot of money too. So case in point, like in May I gained 6,000 and in June I lost 8,000. Like in less than a month I lost $14,000. But now since the market back, I'm gaining back right now about 7,000. So it really very volatile. And look at today, it was 95 today, and then it went to 102, and now it's only 100. So the price is moving a lot. So yeah, just don't do this at home because it's really risky. The position really risky. And Bitcoin today is not looking good. Look like Bitcoin is coming back down. And let's see, Solana done, and what else? And I want to talk about one more thing about this the news today. The deeper picture of Wednesday, August 26, 2026. Most important theme is that corporate earnings, especially AI, remaining very strong, but inflation, high interest rates are becoming a bigger obstacle for the market. 1. NVIDIA delivered another shoe quarter, but expectations are now extremely high. NVIDIA reported stronger than expected quarterly results and forecasts next quarter renew above Wall Street estimates. The key issue is that investors have become accustomed to NVIDIA massive outperforming expectations. So simply bidding may no longer be enough. One concern is profitability. NVIDIA expects gross margin to slip from roughly 75% to 74%, suggesting rising costs as the company ramps up newer AI products. Its outlook also excludes meaningful China data center chip sales, making China policy another important uncertainty. Why this matters? NVIDIA is effectively a referendum on entire AI investment boom. Microsoft, Meta, Amazon, Google, and other hyperscalers continue spending aggressively on AI infrastructure. NVIDIA can keep growing rapidly, but is spending slow. NVIDIA and semiconductor valuations could come under pressure quickly. Market implication: fundamentally bullish for AI, but NVIDIA valuation, meaning investors are demanding nearly perfect execution. 2. Inflation, still much too high for the Fed's comfort. The July PCE inflation report showed headline inflation rising 4.02% month over month and 3.7% year over year. Inflation now remains above Fed's 2% target for 65 consecutive months. That matters because PCE is the Fed preferred inflation measure. The Fed basically wants this trajectory: 3.7%, 3.2%, 2.7%, approximately 2%. Instead progress has been slow and uneven. At the same time, inflation adjusted consumer spending were essentially flat in July, while the household savings rate remained low. That creates an uncomfortable combination: persistent inflation but softer real consumer demand. This is why the market is worried about something resembling stagflation, inflation staying elevated while economic growth gradually weakens. A Fed rate hike is becoming realistic possibility gain. Markets shifted slightly toward expecting another rate increase following today's inflation number. Reuters reports that investors are assigning a 60-40 probability around a hike in the coming month, although expectations remain fluid. That is a major change from a normal market narrative of waiting for rate cuts. The Fed had three broad choices: Fed action rate cut, very bullish for stock and crypto; hold rate neutral and mildly positive; raise rate, unusual narrative from growth and stock and crypto. So if the Fed raise rate, the price should be coming down for stock market and cryptocurrency. A rate hike becomes more likely if inflation remains nearly 3.5% to 4% and the economy stays resilient. Jackson Hole could move every major asset class. Fed Kevin Walsh is scheduled to deliver his major Jackson Hole address this week. Investors want to know whether he prioritizes aggressively fighting inflation or avoiding damaging his financial market and economy. Bond markets are particularly nervous because governments are borrowing enormous amounts of money while investors demand ever high yields to hold long-term debts. Walsh's language could immediately move Treasury rate, Treasury yield, dollar, stock, gold, and Bitcoin Solana. For example, Walsh sound very hawkish. Treasury yield and dollar could rise while technology stock and crypto decline. The more balanced message could reduce the opposite reactions. The bond markets may actually be the biggest risk to stocks. The 10-year Treasury yield rose again today, reaching roughly mid 4.6% range. So Treasury yield today 4.6. And now it's coming back down a little bit now. Coming up and then coming back down a little bit for Treasury yield. And the stock market PKW come down a little bit, and we can see like the stock market just come down a little bit. Nasdaq Composite Gold went up a little bit. Crude oil come down a lot to 81 now. SpaceX actually went up a little bit. Apollo, private equity firm, it went up a little bit, not that much. NVIDIA went down and then went up after went up 4% after the market closed. So look like the bond yield went down and then went up and then came back down a little bit. It was 5.17 now. Wait, why 5.17? Now went up to 5.18 now. Wow, it went back up. But before it went back down before the market closed. Now it went back up now. Alright, let's see. Treasury yield amid to 4.6. 10-year yield 4.6. 4.65 now, 4.66, almost 4.67. So now it will go up some more. That's bad news. Suppose 4.7 owning Treasury. Well, let's pay technology company. So let's say 4.6. This matter because Treasury effectively compete with stocks. Suppose an investor can earn 4.7% owning relative safe Treasury bond. They may be willing to pay may be less willing to pay extremely high valuation technology company. This affects is particularly strong on growth stocks because much of their value comes from profit expected and many years in the future. Higher rates lower present value of the future earnings, lower theoretical stock valuation. Today, Treasury move came as stronger inflation increase expectation that rate might remain higher for stronger. For me, 10-year Treasury yield is one of the most important number to watch right now. Wall Street barely moved because investors are conflicted. The major U.S. indices finished almost unchanged. Dow Jones Industrial down 0.21%, S&P 500 down 0.2%, Nasdaq Composite 100 down 0.8%. That's actually interesting. Inflation came is harder than hope, which is bearish, but investors were reluctantly to sell aggressively ahead of NVIDIA earnings. This tell the market currently have two opposing forces. Strong corporate earning bullish versus high inflation, high treasury yield bearish. Eventually, one side will probably eliminated. Corporate America remains extremely profitable. One important story that hasn't received after much attention is corporate profitability. Revised economy data show U.S. after-tax corporation profit reached approximately 12% of the GDP, an exceptional high level. This has explained why the U.S. markets have remained resilient despite high interest rates. Companies, especially large technology firms, continue generating enormous cash flow. That is one reason I wouldn't automatically assume that high rate mean the market must crash. Bullish argument. AI productivity, high margin, strong earning growth equals stocks can tolerate higher rates. Salesforce provide evidence that AI spending and spending beyond chip. Salesforce raised its fiscal year revenue forecast to approximately $46.1 to $46.4 billion after Q2 revenue grew 11% to $11.35 billion. Its share jumped roughly 14% after hours. Even more increase is expand partnership with Anthropic. Salesforce announced Cloudforce integrating Cloud AI more deeply into Salesforce software ecosystem. Its AI-related annual recurring revenue approaching $4 billion. That's important because AI story is gradually changing. Initially, AI boom, NVIDIA GPU. Now AI boom, GPU plus cloud infrastructure plus enterprise software plus AI agents. If AI software starts generating meaningful recurring revenue, an AI investment cycle could last much longer. Oil prices are falling, which is one of today's best pieces of inflation news. US crude settled near $82.23, while Brent was around $87.84, both lower on Wednesday. The reason is caution optimism about negotiation between Iran and Oman over Strait of Hormuz. Shipping remains severely disrupted. Roughly only 5 commodity vessels crossed the Hormuz on Tuesday, compared to a 10-day average around 15. That's important because Hormuz remain one of the world's most critical oil checkpoints. If shipping normalize, oil go down, gasoline come down, transportation costs come down, and inflation decrease, Fed pressure decrease. That could become very bullish for financial market, but in negotiations collapse, oil could spike again very quickly. 10. Iran conflict is fundamentally reshaping global energy investment. An investing longer term story is emerging from energy crisis. Europe and Asia are accelerating renewable energy projects because the conflict is Iran. Europe and Asia accelerate renewable energy projects because the conflict in Iran have exposed their vulnerability to disruption in Middle East oil and LNG supplies. The IEA expects renewable to become the world's largest electricity source this year, with renewable generation project rise by 8.5%. Japan is also considering increased crude diversification and pipeline projects that bypass Hormuz, as almost all of its crude imports have historically depended on the route. So the conflict may accelerate investment in solar, battery, nuclear, LNG infrastructure, pipeline, and energy security that could create major long-term investment opportunity. Where I think the market stands now. I summarize today's environment this way. Factor, signal, and important. Corporate earnings strong, very high. AI spending extremely strong, very high. Inflation 3.7, very high. Fed policy hiking risk return, very high. 10-year yield 4.6 plus, extremely high. Oil falling, high. Consumer spending slow down, very high. Corporate profit record high, also very high. This one is bullish. Bitcoin trend medium high. Geopolitical elevated, very high. Scenario 1 I would watch most closely. Bullish scenario would be oil continuing lower, inflation beginning to fall, wash sounding less hawkish, and the 10-year yield drop below 4.5%, and NVIDIA maintaining strong AI growth. That combination could push stock and crypto materially higher. Bearish scenario could be inflation remain near 4%, washing on another hike, and 10-year treasury yield 10-year approaching for 5%, and oil rising again because the talk at Hormuz fell. That combination could produce a meaningful correction in the growth stock and crypto. Right now, I call the environment fundamentally strong but macroeconomy fragile. Earnings are support the market, but interest rates are becoming increasingly important. Alright, thank you everybody for watching, and let's finish by looking couple more things together. Let's see. Solana price 101.6, so it come back up a little bit. 101.6, so it coming back up a little bit, and today I discover something, some stock that called high leverage stock. This one is like 3 times leverage for crude oil. So alright, so the internet is not good right now. Let me turn this off. It might be better. It might be my computer would be better. Shut down this and close that and close that, and see it will be better. Oh my goodness, the computer very slow right now, and very warm too. Alright, so I'm gonna close this down too, and then let's close all of this, so make the computer don't run too much. Alright, so today I will discover something new. It's not really that new, but so this one is crude oil. They use 3 times leverage. So if the oil go up like 1 point, they should be go up 3 points. Let's see. QQT also 3x leverage on Nasdaq Composite. So when it come down 3 points, and when it go up 3 points. Look like this one day it come down to 69 and went down to 72. So the price really volatile. So this one also high risk stock because the leverage. This one also 3x leverage on semiconductor stocks. So let's see, like today I went down to 113, and now it went up to 123. So the price also volatile. Look at the 5-day price or 1 month price. So it all over the place. 191, it went to 151, and now come down to 110 and 115. So this one is 2x of S&P 500. Look at 1 month. It's not that much of volatility. I guess in 5 days have more volatility. So this one is 2 times leverage for S&P 500. So today it went down to 69, and now it's 270. UPRO at 3 times leverage, about 96. Let's say today it went down to 149, and then went up to 152. Now it stays at 151 and 19. This one is 3x of Dow Jones Industrial also. very volatile, 73 to 74, and now at 74.38. Yeah, so this one is the highly leveraged stocks. That's why it very volatile also. Everyone, thank you for watching, and I will see you again in the next episode. Bye bye.